Good afternoon, everyone. You're all very welcome to Wednesday's US Market Open. Today, of course, we will be looking at market movements into the all-important today's FOMC meeting tonight at 7 p.m. UK time, with the press conference to follow at 7:30. As we alluded to yesterday, we've obviously had a busy morning this morning with UK data, European data out. We have seen some kind of volatility this morning. But overall, markets are holding a fairly tepid formation relevant to some of the price action we saw obviously early last week, and of course some of the price structure that we've seen yesterday, particularly in Europe. It very much appears to be the case that markets are in a holding pattern, particularly when we look at and evaluate the market volatility in the US markets, as I said, following the 130 into Bank of Canada and the Fed meetings tonight. S&P is remaining quite flat. The NASDAQ on the alternative remaining quite flat. Now, yes, we had a little bit of a move this morning on the downside across the board in equity markets. However, these indices globally, Europe, the US, the UK, for example, all quite consolidated. Now, we have obviously seen the UK bounce back a little bit. The DAX remaining pretty much unchanged from where it was at kind of 9 o'clock this morning, 8:30, 9 this morning. And as I said, US equities remaining pretty flat as well. We talked about it yesterday. The volatility curve is going to be really extreme and really important today, because that's really going to underpin short-term sentiment, regardless whether you're looking at long or whether you're looking at short selling opportunities in risk-denominated assets, whether it's US equities, ETFs, individual stocks, or actually alternative risk assets like crypto. Volatility is going to underpin directional bias tonight from a news, from a macro, from a fundamental perspective, and that's really where it's important to look at as we move, as I said, into the betterment of today's trading session, but as we also focus, as I said, on tonight's all important 7 o'clock Fed rate meeting. Now, we know the Bank of Canada is expected to cut shortly. Do we think there's going to be much of a surprise in that? Well, unless it's out of the forecasts, of course, 25 basis points is what everyone is expecting. If we were to see a no hike, or no, sorry, should I say a no cut in rates, well, obviously that's going to be a more hawkish move by the Bank of Canada. You'd see Canadian currency obviously strengthening, and you'd look for the TSX to obviously weaken as a hedge in terms of the volatility. But as I said, everyone and their analyst and their dog is going to be focusing on tonight at 7 o'clock. We talked about it last night. The 25 basis points, which is all but being priced in. The policy statement at 7 o'clock, which will obviously give the updated version of Fed Chair Powell and his colleagues' correspondence and comments around where monetary policy is currently set. And as I said, at 7 o'clock, we also get the dot plot from short to medium and longer term expectations on that. So it's going to be par for the course. Then, of course, we move into 7:30. We're really looking for kind of really looking for kind of beyond the needle. Really looking for kind of more nitty gritty. Not so much statements, but obviously comments from Fed Chair Powell as the leader of the FOMC, and really looking for kind of more kind of assertion and confirmation off the back of that. So we would expect the US markets to kind of remain more flat into 7 o'clock. Let's see if there's a little bit of movement. But even from yesterday evening on our Zoom, on our webinar, compared to really where we are today, markets remaining very kind of subdued. So that 6600, 6650 handle on futures remains pretty consolidated. Obviously the NASDAQ around that 24,200 to 300 range, proving to be fairly consolidated. And of course the Dow Jones, which was marginally around that 750, it's peaked its head back above into that 45,800 handle. And of course, when you look at the futures on the one-day performance, you'll see the vast amount of assets, not just equities, not just risk, universally across the board in terms of denominated assets. A lot of them are plus or minus a very, very small base percentage point above the break-even curve. So, as I said, not really surprising. Even if you were to look at assets above 0.5% positive or 0.5% negative, yes, we've seen some of the commodities being slightly off, like for example silver, platinum, copper, palladium, etc. into the open, and some of those liquid commodities like coffee and orange juice being down. But also on the upside, natural gas, cattle just marginally above 0.5%, but the vast majority is plus or minus 0.5%, and that shows that currencies, a lot of the other baseline commodities, oil prices, your equity markets are all remaining fairly consolidated, and that of course even includes crypto, with Bitcoin at 0.67% down on the session. So naturally, as I said, this fixed curve here is going to what's underpinning volatility tonight, and of course whether we go risk on or risk off will be dependent on, as I said, Fed comments, policy updates, dot plot, and then the Q&A at 7:30 this evening. Okay, so as I said, even in the FX side of things, with that strong break in the dollar yesterday, downwards, of course, into those lows, we're still holding above that 96.50, so that's going to become continued into tonight's FOMC meeting. Naturally, that means the euro dollar at 119 is going to be interesting. Cable at 136.5 into 137 will remain interesting. Obviously, it's depending on the break or bounce on cable. If we see 96.50 giving way on cable, well, that's going to bring in even a more inducement to the euro, to the pound, to the likes of the Japanese yen as a hedge against the dollar. And of course, you'd expect those G7, G10 currencies to actually progress quite well against those that base case dollar movement. Now, again, the gold price, we talked about this yesterday, this arching view moving up. We have obviously seen a pivot last night. It did break lower in through Asia this morning into European Open. It has come back to that value area, which was that kind of breakdown. So this is kind of what we talked about last night. We even drew it in live time last night at 8 o'clock. If we just kind of subtract a little bit back, whereabouts are we? Okay, so this is kind of what we were talking about last night. This was at 8 o'clock last night. We were really waiting to see where we're going to get a breakdown of this kind of short-term higher high, higher low structure to allow for price action to come back to the value area. Now, again, if we remove the replay function and just kind of fast forward to where we are now, we have seen the market structures broken down a little bit. So again, gold is probably seeing a little bit more of a move back to that value area. That will still become in play today, particularly if we are to see this value area on the session rejected. So this blue line that we drew last night is actually proving to be the value area on the session, and that 33,680 will become quite interesting tonight to see whether we do get that move back into those 2620s, 2630s, 2640s, and migration back to this value area, or we see price action structure really break out again above this type of corrective move and impulse, and really start to insinuate gains back above 3680s and really try and push on through 3700. And I think that is going to be the breaker bounce tonight. Again, it's going to be tied to volatility. It's going to be tied against the risk on, risk off scenario. And we're going to be able to look at these on a cross asset basis as we move into 7 o'clock tonight. And as I said today, even with those wick downs on the S&P and the NAS at kind of 8, 9 o'clock this morning, they're overall still holding up residually very well in this consolidated region. So this is obviously Mondays, Tuesdays, and today's value area. So we're expecting a lot more volatility, as I said, as we get to the dial at 7:30 tonight off the FOMC. Short-term perspective, BTC on the other side of things did get a marginal break above that 117 high, only to apex back down. Those 115 lows, I think, will become quite interesting on a short-term perspective tonight, particularly when you look at, let's say, the last week or two's price action structure. You've got last Friday's value area, Monday's and yesterday's value area down here around the 115. So that could become a base case pullback area if we were to see a little bit more risk aversion. So let's say, for example, tonight we see the VIX actually picking up. Maybe we see a little bit of a robust recovery in the dollar and risk aversion, risk off movements playing. You'd actually expect that Bitcoin movement to flow back down to those 115 handles. So we'll obviously be looking at that. Ethereum, we talked about this yellow area. It's kind of done exactly what we're starting to see in some of those other assets like gold, for example, but overall holding steadily above that 4,400 level that we talked about last night. And of course in Solana on the weekly, a little bit corrective, still holding above that 88.6 fib level at $231. So again, interesting to see if we were to break back underneath here from a crypto risk aversion side, you'd expect that to probably filter back down into that kind of 210, 215 handle down here. So as I said, really holding pattern for me today into the US Open. Obviously looking at volume into the Open, that first 30-minute price structure move, of course, and then as we move progressively into European close 4:30, and then all eyes on Fed tonight broadly beyond that. Other than that, really not too much. I'm not going to start looking at the Bank of England yet until we navigate beyond tonight's call. And of course, we might actually start looking a bit at Bank of England tonight after that Fed meeting and really kind of springboarding the move again. All right, so that's pretty much what we are at today. As I said, we're not going to do too much delving into markets. We went through it quite thoroughly last night for our weekly call. As I said, it's really just ascertaining, monitoring price structure as we progress through the session, knowing exactly what to expect tonight in terms of volatility, and kind of springboarding the move then, as I said, into that 7:30 press conference, 8 o'clock print, first 30-minute print of volume after the Fed Chair Powell steps onto the stage, I think is important because that really gives us directional bias into the market close. And of course, you can look at previous FOMC conferences to look at the volatility between 8 and 9 p.m. for a back testing style approach as well. But as we said, this is kind of where we're at today. 90% of participants on the Poly Market exchange or platform is looking for 25 basis point decrease. Again, only 30 million worth of volume compared to no change at 57 million, 25 basis point increase at less than 1%. These are definitely gamblers in that sense, not understanding fundamentals, and of course those at 50 basis point increase, which is probably the sneaky one. That for me is probably the most interesting one to watch. If it's a case we were to see the Fed really pivot to a more open expansionist policy for cutting rates, then that will be the surprise. And of course, if we were to see a 50 basis point cut tonight by the Fed, you would see the risk assets progress to the upside. You would be looking for S&Ps, NASDAQ to trigger new highs, and you'd expect the risk environment to really ramp up. But as I said, that's only a hypothetical. It's one scenario. We're watching the 50 basis points, we're watching the 25 basis points, and we're watching the no change scenario at the off chance that Fed Chair Powell and his colleagues in the Fed are looking to defy the Trump administration and actually kick this can down the road even further. But we've kind of seen it. There's been clues, there's been comments. The expectation is a 25 basis point cut, and that is exactly where 91% of the Poly Market sentiment index is currently displayed. So as I said, volatility is going to remain pretty tight through the session. We're going to remain probably in a lot of ranges, I believe, at least until after the European close. And then it's really kind of evaluating price action, as I said, into 7 o'clock tonight. But other than that, let's leave it there. We'll pick it up later, obviously, in our community. Other than that, just as I said, be conscious of risk. Be conscious of the fact that markets are probably a little bit more in a holding pattern. So I would really look for kind of affirmations in the likes of the dollar, in the likes of the VIX, to really see volatility ramp up. Because if there's not much volatility and the markets remain actually subdued, then that would mean that the likelihood of actually engaging in trades would be a little bit more of a fruitless and a wasted exercise. Okay, so just be mindful of that as we move into 7 o'clock tonight. All right, have a good one, everyone. Trade safe. Thank you very much.